Welcome. My name is Van Richards. I'm a chartered financial consultant. And today we're going to be talking about something a little bit different. Usually every day we spend some time when we talk about specific investments, specific stocks, and we talk about the stability, the earnings, and the competitiveness of those stocks. But so many of you have written into me and have asked questions about the new rule, the new law that could possibly delist the stocks from China in the United States. And I thought that since so many of you had a concern about that, it would be a good idea to really break it down a little bit, look at what some of the facts are, look at what some of the possibilities are. No one knows exactly what's going to happen. But what we want to do is we want to take a look at the facts, take a look at the law, take a look at the possibilities of what might be going to happen, and then you can make your decisions based on that information. So with that, let's go ahead and begin into the daily stock analysis. Okay, as I do every day, I want to remind you that my presentation is brought to you by my firm, which is Richards Financial Planning. And if you've got frustrations with your financial planning, if you're making a good income and you're frustrated about putting money away, about knowing what to do, go over to richardsfinancialplanning.com and learn more about the prosperous planning process. Okay, let's go ahead and begin into this and talk about this today. Now, usually at this point, I always put together a short little video that explains exactly, well, precisely what a company does. And I thought, how can I do this when we're talking about a law? And I don't know about you, but I love baseball. And when I started thinking about the analogy between baseball and between the tit for tat that goes on in between the United States and China, it's kind of like the difference in between the American League and the National League. The American League has the designated hitter. The National League doesn't. So the idea is when you're in one town, you play by their rules. When you're in the other town, you play by their rules. It's kind of like this.
It's how you play the game. It's how you play the game. It's how you play the game.
When you're in our town, you have to play by our rules. And when I come to your town, I have to play by your rules. It seems like that would be so simple. That's the way that it should work. Now, the thing is, when we look at the way that the markets are structured on a worldwide basis, two of the major markets are going to be the Chinese market and the U.S. market. Now, the U.S. market is worth about $36.2 trillion. The Chinese market in total is worth about $9.06 trillion. Now, you know, obviously that changes on a regular basis, but let's take a look a little bit more deeply at how this possible delisting regulation is going to be affected in the future. Now, what we usually look at when we look at stocks, we look at the stability, the earnings, and the competitiveness. And this rule is definitely going to change the stability. The rule is called the Holding Foreign Companies Act, and it is actually an amendment to an existing law in the United States called Sarbanes-Oxley. Now, there's two really main parts to it. You can pull this rule up on the internet. I did here. It's on the Congress's website. It is Senate Bill number 945, and it's as you can see, there's really only about 4 pages to it. There are two parts. One is the initial disclosure that companies have to go through in China if they want to do business in the United States. And number 2 is they have actually 3 years to comply. And that's a long time. So if you think that you want to bail out of Chinese stocks right now that are listed in the United States, remember, I think you've got a little bit of time that's in there. Let's look at actually what the initial disclosure does say. The rule actually applies to all companies that are based in another country doing business in the United States on their exchanges. Now, it's not just geared towards China, although China was the main emphasis of it. But if you're an Israeli company or a French company or whatever the case is going to be, you have to be able to comply with the same rule in itself. Now, the second thing is, and this is really the big part of it, is that what the United States is saying is that companies that are based in foreign countries must agree to an oversight audit. That doesn't mean that you have to have auditors from the United States coming in and sitting in your chair doing whatever. But what it does mean is that your company's auditors have to be able to answer questions for an oversight committee. And in the United States, that's called the Public Company Oversight Board. And it's actually part of the Securities and Exchange Commission. Now, as part of this, the idea is it's just not the oversight. What the U.S. Congress is concerned about is companies that are completely controlled by a foreign government. And there's a lot of reasons for that. And I won't really go into those particular reasons. But the idea is they want to assure investors that they're just not investing in a foreign government. So the idea is going to be, look, if I were the Chinese government, I would think of it this way, okay? If I were the Chinese government, and this may be the outcome of it, I don't know. I'm just one man making my opinion here. But you don't have to own the company to be able to control it. It's the same thing that happens in the United States. Companies are not owned by the United States, but the United States tells them what to do by regulation. China doesn't have to own stock or majority stock in a company to have to pass regulations. It's possible that what might be happening is that these companies their holdings could go below ownership level, in other words, below 50% controlling ownership, and they can still have control that's exerted over top of the company through regulations. And that may be something that happens as we go forward. So what happens after all of this goes on? And let's say, for example, if China says, we don't want to comply with this, which I really don't think that it's going to be that black and white. After 3 years of not complying, then the company is going to be forced to be delisted. And there's some bad things that can happen from that, but I don't think we're going to get there. The idea is going to be that the United States wants to prevent companies from doing business that are doing it in a way that Americans might be harmed by. Now, is that good or is it bad? I don't know. We'll talk about it. And if you've got opinions, hey, look, this is a live show. Go ahead and write them in. I'll see them here as we come to the end of this. I want to hear what your thoughts are. So feel free to enter some comments. So how did this law, how's it affected stock prices so far? Now, when we look at what's been going on in the markets, this is actually the 4 companies that are listed on the NASDAQ 100. Baidu, JD.com, NetEase, actually Alibaba's not, but I went ahead and threw it in there because, you know, Alibaba's Alibaba. It's a big company. But you can see the big dip here. When you look at the spaghetti graph, you can see the big dip. This is when the law was getting ready to go before Congress and they were going to vote on it and everything. So it did take a drop, but I don't think that's sustained. Look what happened afterwards. I think that a lot of people saw that drop as a buying opportunity. We saw Baidu go up considerably since this, and there's still going to be a consensus of movement up in the economy in China. And I think that's one of the biggest reasons why that people continue on a worldwide basis to want to invest in China. All right, let's keep going on here if I can make this thing go forward. Let's look at this from a bullish and a bearish aspect. And I think you're going to like this. These are the good things that can end up coming from all of this. The first thing that is possibly going to happen is that U.S. regulators they've thrown down the gauntlet, they've thrown down the glove and said, you have to let us be able to know what's going on with your company for you to do business in the United States. But what we're going to do is we're going to allow you to use Chinese auditors, the auditors that you choose. Just let us have some oversight over it. Maybe one person that can oversee it to make sure that things are going okay. So that's a new law that's in the works right now. Also, I've mentioned it before, 3 years is a lot of time. Now, another thing that's happening is that some Chinese companies, actually there's about 196 companies, around 196, there's differences of opinion there, companies that are doing business in the United States, that are public firms in the United States that are based in China. Out of that 190 some companies, there are 30 companies that have already sought to have dual listings. Now, what do I mean by a dual listing? That means that they may have a stock listed, or let's say a classification of share that's going to be listed on the Shanghai Exchange, which is under more scrutiny of the regulators from the United States, as opposed to having stocks listed on the Hong Kong Exchange. And there are 30 companies, NetEase, Alibaba, JD.com, all of these larger companies have already done this. Another thing to look at is that this delisting, as it does create two tiers of stocks, it may make it more available for many other investors to participate. Actually, Alibaba stated previously that since 1999, they've let PricewaterhouseCoopers be their auditor, and they have tried diligently to comply to U.S. regulations. So there are companies like Alibaba that are already doing this. And the other thing is that China, Beijing is probably the government. No one can speak for a government, of course. But in my opinion, I think that they're going to take a wait and see attitude. The elections in the United States, quite frankly, are still a toss-up. Some of you might not think so, but there are possible things that can happen that nobody knows about. So I think the Chinese government is just waiting to see what's going to happen from that standpoint. The other thing that could happen, which could be possibly bad or good, is that China could impose measures that would blacklist U.S. companies in China. Now, this should actually be more on the bullish side. And I think that what's going to happen is that U.S. regulators are going to see that, hey, if Apple is prevented from doing business in China, it could really impact that company's stock, and it is a huge part of the American economy. So it's a possibility that that will have a big influence on it too. Also, here's the thing that could actually help those of you who are in China. Some of you may be saying, if you're in China, you may be thinking, hey, go ahead, delist the United States. And frankly, what it might do is it might help you, because if stocks are not being sold on the U.S. exchanges, it may make them more available on the different Chinese exchanges. There's already some talk of how that tech stocks that are Chinese tech stocks that are listed on the NASDAQ could be moved more toward the starboard in Shanghai. And that would make it more available to Chinese citizens in general. Now, the bearish aspects, the negative part of this is that what the U.S. is trying to do is they are trying to prevent investors here from being involved in fraud. And I'm going to show you an example of that in just a moment. The other thing is that Chinese companies could also respond by avoiding the United States. So there may be companies that just say, hey, we're just going to stop doing business there because it's too much of a risk. The other thing is, when this happens, if it happens, and this is what I think that is going to be something that's going to push regulators to try to prevent this from coming to that witching hour in 3 years. It's just not going to tick down and just happen. The reason that they're going to try to prevent it is this. When a company leaves the United States, they may give the value that they see back to the investors. They may redeem their shares, but they may not redeem them at actually what the market value is. They may look at some other valuation. So there could be a lot of controversy that goes on at that point. And I know that regulators in the United States want to prevent that. Now, a moment ago when I talked about that U.S. regulators are trying to prevent fraud, what they're trying to do is they're trying to prevent something like what happened earlier this year with Luke and Coffee, where that one of the executives had millions of dollars of transactions that were fraudulent. And that probably would have caught had there been more auditing and more oversight from that standpoint. So where do we go from here, friends? Where do we go? The idea is, if you're in the United States and you want a stock, let's say you want to buy JD.com or Alibaba or whatever other company that's a Chinese stock, there's nothing that's stopping you from going to a brokerage firm that actually has an account that's based in another currency. There are a lot of brokerage firms that do that, from international brokers all over the place. And they're just not, it's not something that you got to look hard for. Charles Schwab, Fidelity, Goldman Sachs, the company that I use called Folio. There's a lot of companies that deal with foreign exchanges. you can have an account in that particular foreign currency. So there are alternatives to look at. So where do we go? Where do you go? Number one is you need to have a financial plan. If you're just going out there and you're saying, hey, I want to buy China Mobile, I just have to have that stock, you're crazy. Not because it's a bad stock, but because if you're putting all of your eggs in one basket, you're surely setting yourself up for some difficulties. Diversify. If you want to have Chinese stocks and you really want to remove yourself from the possibility of the change that may happen, buy it on a brokerage that's in that exchange. That's an alternative. Then diversify too. So that kind of ends what I wanted to talk to you all about. Let me ask you this. How do you think that it's going to affect your investments? If you were in another country, if you're in China, do you think that a company being delisted in the United States, if it happens, how's it going to affect your investments? If you are in the United States, if you're in Europe, if you're in South America or any other part of the world that people listen to this show from, how do you think that it's going to affect you? If you think that it is going to affect you severely, then you need to take action and you need to take steps. Remember, 3 years is a long time. Give yourself some time. Don't wait until, the last minute before the companies are put into a penalty box and exited from the United States. I don't think it's going to come to that, but it will affect prices as time goes by, as arguments go back and forth, depending on who's going to be heading up the administration, and we'll just have to wait and see how that goes. So, friends, I'd like to thank you all for taking the time to listen to this show as a different format today. I hope that it's been informative to you. And if you got questions about this or other investing issues, go ahead and enter them in to whatever platform that you're listening to me on. Generally, if you enter it into YouTube, I'll answer you a lot quicker. Facebook, Twitter, I'll be honest and tell you, I don't really respond to those that much because most of my traffic from information comes over to YouTube. So if you're listening on another channel, go over to YouTube and subscribe to richardsfinancialplanning.com. And then tomorrow, I'll come back to you and we'll be back to talking about stocks again. And I think tomorrow we're going to pick one of your choices and we'll see which one it is. So until then, have a good evening and let me hear from you. Oh, wait, I got one more comment before I end up going. Oh, hi, Bear Grylls. Nice to see you. I thank you for listening wherever you are in the world. Have a good evening and we'll talk to you tomorrow.